Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me, we have Ben Jones. He's a product development specialist with the index research team at NASDAQ to discuss the divergence of the Nasdaq-100 from the rest of the market. Ben, it's great to have you with me. Thanks for wrapping up the week as always. And before we get into our charts today, let's just get a weekly update on the performance trends you're seeing.
Thanks, Jill. Yeah, it was another positive week for U.S. equities, and this is a good sign, especially kind of how it's rebounded off of some of the weakness we saw last week. And as we head into the holiday weekend, it's good to see that the S&P 500 has rallied about close to 3% this week. The Nasdaq-100 almost 2.5% or more this week as well. I think one good sign that we're seeing is we're beginning to see some strength come from small cap and mid cap. And again, this is a turnaround from last week. Small cap and mid cap up about 8.29%, about 7.34% respectively this week. As we've talked over the past few weeks, we talked a lot about the participation and breadth from, large cap, as it compares to small and mid cap. And it's still quite pronounced, right? Even though we're seeing just a positive week for, small and mid caps, it really doesn't change anything just yet. We still see a massive difference between kind of those stocks that are participating within these different size groups. Right now, about 14% of small cap stocks within a particular, small cap 600 universe is trading above their 30-week moving average. For the mid cap 400, only 22% are trading above their 30-week moving average. If you look at, let's say, the Nasdaq-100, it's up around 60%. And if you look at the S&P 500, it's around 30%. So we're still seeing more breadth from the large cap equity universes. Some other areas where we saw some positive signs this week, just the momentum that is present in oil, right, and the energy market just in general. I think it's the fourth straight week that we've seen gains in crude oil. You're looking at futures are up over 13% for the week. Energy from an equity standpoint has been really one of the bright spots just this month, right, in the month of May, along with technology. Another interesting point about sectors that when we think about kind of how this rally has morphed and moved going forward after kind of those lows in March, really the only two sectors that are down over the month are utilities and consumer staples, two really defensive value sectors. And so I think that kind of typifies this type of rally, right? It's fairly risk on, it's favoring the offensive sectors, and it's favoring the growth sectors, Jill.
All right, and let's take a deeper dive in that when we look at growth versus value with our first chart here. You can really see that in the S&P 500 value versus growth.
Yeah, that's right. So, kind of talked about, some of the things that we've seen, lately from a sector standpoint. And, one of the major themes kind of this year, as we started off the year was just, how strong the growth style box was relative to value. And so what you see in this chart is basically tracking two S&P indexes, the S&P 500 value and the S&P 500 growth. And it all starts with, let's say, indexed to a $100 start value going back, last 12 months. And as you can see, this, chart rises above the horizontal line. We see, positive performance. When you see it fall below that, horizontal line at 100, it's, it's negative. The key here is that, there was a brief moment in time kind of late last year, we saw kind of value was outperforming growth for a little bit. It was really extremely short term. But what's interesting is that as 2020 started, growth, really took over and has been favored over value during the whole kind of, COVID-19 correction, as well as off of that March 2020 low. So what you see here is just the pronounced outperformance that we're seeing from, let's say, the S&P 500 growth index, i.e. just growth, large cap growth, over the large value. And if you look at, let's say, the past 12 months, I mean, it's a massive difference, Joe, when you're looking at, the S&P 500 growth up over about 13.5% on a total return basis, while value is still in the red, right, down about 4.34%. And so this just goes to show you, Jill, just how strong the growth segment of the U.S. market is relative to value.
All right, Ben, and let's drill down even more into the Nasdaq-100 specifically, and we're seeing the same trend there as well in our second chart.
That's right, and this is when things get interesting, because you can see that when we add the Nasdaq-100 to this chart, you can see how the Nasdaq-100 has outperformed both the S&P 500 Growth Index as well as the S&P 500 Value Index. And it just shows you how this particular index has performed relative to those two other benchmarks. When you think about what the Nasdaq-100 is, I mean, it's predominantly a growth index. When you look at its composition, roughly over about 62% of the index is oriented towards, large cap growth, about, 13 or so percent in large value, and then, just over 23% is in that large blend camp. So it is, predominantly a large growth index. And so when you think about that trend that we saw earlier, where, large growth in the S&P 500 standpoint was outperforming value, you can see how the Nasdaq 100 is outperforming those two indexes, where it's up almost over 27% over the past 12 months. And I mentioned kind of the participation rates in small and mid cap earlier. Large cap growth is across the board seeing way more participation than the other style boxes, right? When we look at the large cap growth universe of U.S. stocks, over 1,000 names, about 54% of stocks are trading above their 30-week moving average. If you look at large value, which is about 1,800 names or so, only 12% of that universe is trading above their 30-week moving average. So not only do we see the Nasdaq 100 outperforming those two large cap value and growth indexes, we also just see that large growth universe quite resilient. And I think as long as we continue to see growth outperform, it should play well into the Nasdaq 100 going forward.
All right, Ben. Great to have you with us as always. Thanks so much for joining me on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.